Hi and welcome. We'll look at the consolidated statement of financial position. IFRS 10 consolidated statement lays out the basic procedure for preparing consolidated financial statements. How it does this is by outlining that the combination of the parent and the subsidiary's financial statement is through adding items line by line. All those items which are like items. We add assets to assets, liabilities of the parent to that of the subsidiary, equity, income, and expenses. However, we shall see that equity is treated differently. What are the basic consolidation procedures? There are certain steps that should be taken into account in order for us to prepare the consolidated financial statement so that we can show the information of the group as though it related to one single entity. The first thing to do is that the book value or the current carrying amount of the parent investment in each of the subsidiary and the equity of the subsidiary should be eliminated or should be cancelled out. Then B, we should adjust for the non-controlling interests, particularly when it comes to net income, so that we can arrive at the net income which relates to the owner of the parent. Then finally, we should show the non-controlling interests as part of the net assets. We should show the non-controlling interest in the net assets of the consolidated subsidiary separately. And we should also present it separately in the consolidated statement of financial position. The other matters that we need to discuss, but this will be subject to a different video. Number one, goodwill on consolidation. Number two, dividend paid. And then number three, unrealized profit. This unrealized profit arises out of intra-group trading. Intra-group trading is a situation where you've got the parent and the subsidiary trading with each other. And out of that, we end up with one company having payables or having receivables or claiming some receivables from the other. Of course, on the books of the other, we'll show a corresponding entry, a corresponding liability in form of receivables. These two should be cancelled out each other. In this video, we are looking on how we prepare consolidated statement of financial position. And its preparation is very basic. Two steps basically. The first one is to cancel out items which appear as an asset in one company and liability in the other. And most of these will be the intra-company item or intra-group items. And then we add together everything else that will remain uncancelled. Some of the items that will require cancellation, as we spoke about, or elimination, will be investment in the subsidiary company. And this is eliminated by the subsidiary share capital. At the end of it all, in the statement of financial position, we only show the equity of the parent. And then if there are any intra-group trading within the group, then we should eliminate that as well. And we've got an illustration here where if S sells goods on credit to parent, the parent would have a receivable in the account, and S would have a payable. And these two intra-group items should be cancelled out each other. We shall shortly see that in an example, which follows shortly. Please take a minute and we go over it. Okay, what are we told? We are told that the parent company regularly sells goods to a subsidiary S company, which it has owned since incorporation. The statement of financial position of the two companies as at the last day of December 2019 is as follows. We have all those items. We have the statement of financial position for the parent and the statement of financial position of the subsidiary. And then we are required to prepare the consolidated financial statement. What do we do? What we do is, number one, we cancel out those items that appear as liability in one and an asset in the other. And the example that we gave is investment in subsidiary. So this amount 40,000 should be eliminated. But what is the corresponding liability? The corresponding liability is the 40,000 shillings ordinary share capital. So these two should cancel out each other. And then we spoke of intra-trade items. And the intra-trade items that we spoke about, you notice in this case we have receivables in S company, a figure of 2,000. And this corresponds with payables in P company, which is 2,000. These two should cancel out each other. And those are the only items that cancels out. The first step is to strike out those items which appear as asset on one side and liability on the other company. And then step two is to cancel out what remains. Now, when it comes to preparing group accounts, you could actually do it right here in this question. You draw an extra column. I'm not able to draw it here, but you can draw an extra column where you add those items that were never added together. And this is how we do it. Here, I've drawn the extra column. I add plant, property, and equipment in both parent and the subsidiary, and the group share would be 8,000. The 40,000 cancelled out. The 40,000 investment in the subsidiary cancelled out with the equity shareholding in the subsidiary, so that doesn't get added up. Then you look at the inventories, we add them together to get 28,000. Receivables in S was cancelled out, so we leave that out. Receivable in other receivables, we add them, and so is cash at bank. But notice, we didn't cancel out cash at bank with bank overdraft. Okay. Then we come to equity. For equity, we only show the one for the parent. In any event, this other one cancelled. That's 50,000. We add retained earnings, that figure, and we all add up all those other items that were not cancelled out, like these 2,000 and these 2,000. And that will be our consolidated statement of financial position. You can prepare it that way, or you can opt to prepare it as a single statement, as I've shown here. So either of the approaches are okay. I've explained the items that cancelled out each other, and then we have our consolidated financial statement. I've also made two remarks, that the P's bank balance is not netted off with C's bank overdraft. As if we did, this would be less informative. And finally, we only show the parent's share. That marks the end of this video. If you have a question or a comment, please put it on the comment section. Remember to subscribe on this video, view it, and also if you have any comments, you put them in our comment section. Thank you.